That spike wasn't a breakout, it was a raid. Price ran the stops resting below that low, grabbed the liquidity and reversed on the spot. Traders who bought the breakdown got trapped. Traders who read the sweep caught the reversal. In the next few minutes, a three-stage blueprint, setup, confirmation, execution, to trade the reversal after the sweep instead of getting caught in it. Stage 1, the setup. The market moves from liquidity to liquidity. Resting orders, the stop losses of other traders, pool in predictable places. Above old highs sits buy-side liquidity, the stops of short sellers and the entries of breakout buyers. Below old lows sits sell-side liquidity. These pools are fuel. Price is drawn to them, runs them, and reverses. The most powerful pools are engineered equal highs and equal lows, the previous day's high and low, the session high and low, the obvious levels every retail trader anchors to. Find that pool first. So before anything, locate the target. The cleanest liquidity pools are the obvious ones, equal highs and equal lows, which look like support or resistance but are really bait. Add the previous day's high and low and the current session's high and low. Now apply the filter. The highest probability reversals come from a sweep that runs against your higher time frame bias into a discount or a premium. A raid of sell-side liquidity into a discount is where you hunt for longs. You're not trading the level, you're trading the reaction to the level being taken. Here's the mistake that funds the entire market: buying the breakout above equal highs or selling the breakdown below equal lows. That clean, obvious level is not a breakout waiting to happen, it's a target. It exists precisely to be run. The breakout traders who pile in are the liquidity, their stops are the fuel for the reversal. If a level looks too clean and too obvious to fail, treat it as the destination, not the signal. Let it get taken, then look for the turn. Stage 2, confirmation, and this is where discipline pays. A sweep alone is not a trade. Watch the sequence. First, the raid, price trades through the pool and takes the stops, often a fast aggressive push with a long wick. Second, the rejection, price fails to hold beyond the level and snaps right back inside the range. That wick through and close back in is the tell. A genuine break closes and accepts beyond the level. A sweep wicks it and rejects. Close location is everything. It's the difference between a reversal and a continuation. But rejection still isn't enough. You need a shift in structure. After the sweep and rejection, look for displacement, an aggressive move back in the opposite direction that breaks the most recent short-term swing point. That break is the market structure shift, sometimes called a change of character. It's the confirmation that the raid has flipped intent, that the sellers who ran the low are now trapped and buyers have taken control. And that displacement leg almost always leaves a fair value gap behind it, which is exactly your entry mechanism. Let's make the distinction unmistakable because your whole edge depends on it. A sweep pierces the level with a wick and then closes back inside. The stops were taken but the level held. A real break closes beyond the level and stays there, acceptance. If price sweeps the low, rejects, and then displaces up through a swing high, you have a market structure shift, a confirmed reversal. If it sweeps and simply keeps going with acceptance, it was continuation and you stand aside. Read the close, then read the structure. Here's a pro tip on timing. The cleanest, most reliable sweeps fire inside the kill zones, the London Open and the New York AM session, when real institutional volume enters. And they often come against the session's opening move, the Judas swing, a false push in one direction to grab liquidity before the real move. Right pool, wrong time is a weaker signal. Right pool inside the kill zone against a Judas swing is your A+ reversal. Let the clock confirm the level. Stage 3, execution. Do not chase the displacement candle. That's how you get a terrible entry. Instead, wait for the retracement back into the fair value gap or the order block that the displacement left behind and enter there. It's the same precision entry mechanism. You let price come back to you at the inefficiency created by the reversal. The market swept the liquidity, shifted structure, and handed you a discounted entry into the new direction. Patience here is the entire trade. Your stop is logical and tight, just beyond the extreme of the sweep wick. If price retakes that high or low, the raid failed and you're out small. That's the beauty of trading reversals off liquidity. The invalidation is obvious. Your target is the opposing liquidity, the pool on the other side that price is now drawn toward. Sweep the low, target the high above. Because you entered at the reversal and you're aiming for the liquidity across the range, these setups produce some of the largest risk to reward in all of trading. The final mistake, front running the sweep. Entering the instant price pokes the level before the rejection and the structure shift is how you get run over. You're just adding your own order to the very liquidity being collected. The sweep needs to complete, reject, and shift structure before you act. No market structure shift, no trade. Let the market show its hand, take the stops, and confirm the reversal, then you enter with the flow, not in front of it. Compress the blueprint. Set up, identify the obvious liquidity pool, equal highs or lows, previous day or session extremes, sitting against your higher time frame bias. Confirmation, price raids the pool, rejects back inside, then displaces and shifts market structure, leaving a fair value gap. Execution, you enter on the return to that gap, your stop sits just beyond the sweep wick, and you target the opposing liquidity across the range. Price hunts the obvious stops, fails, shifts structure, and hands you the reversal. That's the liquidity sweep from stop raid to high probability reversal. Now your turn in the comments and be specific. Which liquidity pool gives you the cleanest sweeps, the previous day's high and low, equal highs and lows, or the session high and low? Drop your go-to pair and session. If this changed how you see breakouts, subscribe to Stock Market Method and watch the fair value gap video for the entry mechanism these sweeps set up. Educational only, not financial advice.